Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action on Wall Street. It's been a turbulent day in the markets with plenty of twists and turns, so let's break it down for you long investors while keeping an eye on the short-term waves. Buckle up because we've got a lot to cover, from tech sector turmoil to some standout performers and key economic signals. Let's get started. First up, let's talk about the broader market action. The major indexes took a hit today, reflecting a risk-off mood across the board. The Dow Jones dropped over 1%, signaling broader concerns, while the Nasdaq slid even further, down nearly 1.6%, dragged by heavy selling in tech stocks. The S&P 500 wasn't spared either, shedding more than 1.2%, and the Russell 2000 followed suit with a decline of almost 1.8%. Volatility spiked too, with the VIX jumping over 16%, showing investors are bracing for more uncertainty. For us long-term folks, this pullback might be a healthy correction after recent highs, but short-term, it's clear the market is grappling with some serious headwinds. Now let's zoom in on some of the day's big winners among large-cap stocks. Despite the tech rout, we saw some standout performers. McKesson Corporation soared over 16%, leading the pack with impressive gains, likely tied to strong quarterly results. Cardinal Health also caught attention, jumping nearly 10%, while Hershey's sweetened the deal with a 9% rise, possibly on robust earnings and a positive outlook. These gains in consumer defensive and healthcare sectors hint at a flight to safety amid the broader market storm. For long-term investors, these names could be worth watching as stable anchors in choppy waters. On the flip side, the losers list paints a grim picture, especially in tech and healthcare. Cummins took a brutal hit, dropping over 10%, while Qualcomm fell more than 8% amid broader sector weakness. Novo Nordisk also stumbled, down over 8%, reflecting some specific pressures in the weight loss drug space, with competitive news breaking. Eli Lilly wasn't far behind, shedding nearly 8% as well. Short-term, these drops sting, but for us long-term players, they might signal buying opportunities if fundamentals remain intact, especially in innovative spaces like semiconductors and biotech. Looking at the market movers by trading activity, it's no surprise that tech giants dominated the volume charts. Nvidia and Amazon saw heavy action, though both trended down slightly over 1% and more than 4% respectively. Palantir also grabbed attention with a nearly 7% drop, reflecting the ongoing software sector sell-off. Tesla, another high-volume name, slipped over 2% as investor sentiment wavers. These moves highlight where the market's focus is right now. Tech remains the battleground, and for long-term investors, patience might be key as volatility shakes out weaker hands. Diving into the news, the tech sector is under siege with fears of AI disruption rocking software stocks. A new AI model from Anthropic has sent shockwaves, contributing to a brutal sell-off in traditional software names, with hedge funds reportedly shorting the space heavily. Analysts like Dan Ives from Wedbush still see this as a buying opportunity, arguing the AI narrative remains bullish long-term, even if short-term pain persists. Meanwhile, economic data paints a mixed picture. January layoffs hit a 17-year high for the month, and job openings sank to a post-pandemic low, raising concerns about labor market fragility. Yet some argue unemployment remains low, suggesting resilience. For us long-term investors, this underscores the importance of diversification beyond tech into more cyclical or defensive sectors. Shifting gears to earnings, it's a packed week with some heavy hitters reporting. Disney topped expectations, but saw shares sink over 7% on leadership transition news, a reminder that market reactions don't always match results. Qualcomm also beat estimates, though its stock dropped over 8% as tech fears overshadowed the news. On the brighter side, Hershey's delivered a sweet surprise with strong results, pushing shares up 9% and offering an optimistic 2026 outlook. Amazon and Microsoft are also on deck, and their reports could sway tech sentiment further. For long-term investors, these earnings are critical to gauge whether current valuations in tech and consumer sectors hold up under scrutiny.
Exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus, track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Peeking at the week's top performers among large caps, we've got some impressive moves. Old Dominion Freight Line surged over 22%, showing strength in industrials, while FedEx climbed nearly 15%. Lumentum Holdings also shone with a 14.5% gain, bucking the tech trend. These weekly gains highlight pockets of strength outside the tech meltdown, offering long-term investors potential areas to rotate into for stability. Conversely, the past week's biggest losers tell a stark story. AppLovin plummeted over 30%, while PayPal and Robinhood each dropped more than 21%, hammered by the software sector's woes. Novo Nordisk also saw a 20% decline over the week, tied to competitive pressures. Short-term, these are painful, but for us focused on the long haul, they might present discounted entry points if the underlying businesses remain sound. Let's touch on sector performance over the past week. Consumer cyclical and industrials led the way with gains of over 1.7% and 1.4%, respectively, showing resilience amid market turbulence. Real estate and energy also held up with modest upticks. These rotations suggest that investors are seeking safer or value-driven plays, a trend long-term investors might consider when rebalancing portfolios. On the downside, healthcare and technology sectors were the hardest hit over the week, down 1.77% and 1.42%, respectively. Utilities and communication services also lagged, reflecting broader risk aversion. While short-term pain is evident, these sectors, especially tech, could rebound over the long term as innovation and demand drivers like AI continue to evolve. Wrapping up with the most active stocks by volume, Nvidia and Amazon again topped the list, showing how much investor attention remains glued to tech giants despite their dips. Intel and Palantir also saw significant trading activity, underscoring the sector's dominance in market focus. For long-term investors, high volume often signals liquidity, which can be a plus when building positions over time.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.